Hi, welcome to Out of the Rough. I'm Fred Arnold. In this show, we're going to highlight opportunities and solutions to help get you out of the rough and into success, both personally and financially. In these tough economic times, I want to bring to you practical solutions to many of life's challenges. And today I've got Fred Kreger. Fred Kreger is a mortgage professional at American Family Funding. And Fred, I want to talk about a type of loan that helps people get out of the rough when it comes to making repairs on their home.
Well, thank you, Fred. Today I wanted to kind of talk about a program that's called the 203K FHA loan. And a lot of people don't know about this loan, and it's quite remarkable because days are gone that we can actually do construction loans.
They're hard to find construction loans, aren't they?
Yeah, there's no lenders out there that are going to want to lend on construction.
Right.
So what FHA did, again, this is a government-sponsored program, is they allow a combination of a loan that does a traditional FHA loan with a improvement loan all together under one loan. And that enables someone to either purchase a property or actually refinance it. So I think that we need to clearly understand that you can purchase a home, whether it's foreclosure or whether it's a short sale, and especially in this day and age, there's a lot of homes, right, that don't have carpeting, the appliances have been stripped, that hasn't been lived in probably over a year. And let's face it, those homes need a lot of help.
It may be even vandalized. There's a lot of issues going on with that. And so it's an FHA loan, 3.5% down if you so choose to, up to certain loan amounts. And then they give you some more money to make the repairs. So it's a loan greater than 3.5% down.
Exactly, and that's the remarkable part, because what will happen is that they'll take the value of the current property as it is now, and then a special appraisal will go out to the property and say, okay, this is what needs to be done. There needs to be new appliances, there needs to be new rain gutters, there needs to be new flooring, even minor repairs, or let's face it, even in refinance, you bought a home in Canoga Park in 1970 and you still have the same appliances.
Right.
Let me tell you, you need to upgrade.
Yeah.
And this actually enables you to do that.
Yeah.
And what they do is they actually give a future value of that property once all the improvements have been made. And again, it's under one loan.
And the important thing with interest rates as low as they are and the opportunities to buy a home, I don't know if you'll ever get a better opportunity, possibly in my lifetime, to buy with interest rates low and with values that are, housing values have dropped 40–50% in some areas. What a great opportunity to take advantage of it. Housing affordability is at its best point. So it's 3.5% down FHA loan. What are some other great characteristics of an FHA loan?
Well, the good part about it is it's for people who have maybe non-traditional credit, people who, first-time home buyers. Because let's face it, both you and I see these borrowers every day. They make good income. They've been trying to save as much as possible. But let's face it, in California, for someone to save 20% as a down payment, come on, it's going to take an entire lifetime for them to own a house. And you and I see on a daily basis people who really deserve to be in a home. And I think that's really the American dream. And FHA allows them to get into that home at 3.5%. The 203K allows them to get into a home and do improvements, basically make a home the way they want it to.
And this is no freebie. This is no handout. It's not a product from what you were explaining to me where it's a subprime product because it's only 3.5% down, but that person has to pay special mortgage insurance to help. That money goes into a fund for future foreclosures in the system. So it's not a freebie. Someone says, well, wait a second, no money, hardly any. We're still verifying their employment, right?
Correct.
And we're verifying that they have a job. We're verifying reasonable credit.
Right.
We're verifying certain characteristics. So it's not a subprime loan or a freebie.
None whatsoever. It is actually traditional underwriting, but again, it's usually typical. People think of FHA loans as first-time home buyers because, again, they're new to the process. And one of the great parts about a streamlined 203K, you can actually add energy-efficient appliances to the program as well. So there is a maximum. There is no minimum money that can be spent. It could be for $5,000. It could be for a couple grand that people may not have.
On the upgrades.
Yeah. Let's face it, they walk into a home, they need new carpeting, it's a couple $1,000s. Well, we've only allocated X amount of dollars for our down payment and closing costs. I want to go ahead and put this into that loan. Perfect sense whatsoever. The HUD REO properties, or what we call real estate owned properties, HUD owns them in that type of product. There's also coincides with what's called the good neighbor next door. It gives special allowances for teachers, police officers, firefighters, et cetera, that work in certain areas, and also works with what's called high balance loans. So again, here in Southern California, let's face the median home price is a little bit different than in other parts of the country.
Yeah. Let's talk about the type of repairs you can do. You can't move walls, but you can
Correct. You can't move walls. You can do new flooring, minor remodeling, bathrooms, kitchen. The biggest thing that we find really is, unfortunately, in foreclosures, people strip the homes. They strip the appliances, they strip the cabinets, they remove things of value that they could sell, unfortunately. And so when a person walks into it, unfortunately, it's owned by the bank. And so the bank says, hey, you're buying it as is, and you're agreeing to buy it as is, and unfortunately, it's not livable. So that's what this 2 or 3K option is great for.
It's a solution for those looking for that solution and being able to buy a house 3.5% down. It's just amazing when you were telling me about it, plus the repairs. How can those watching this online get a hold of you, Fred?
Well, great. You can get a hold of me locally at my phone number, which is 661-505-4311, or shoot me a simple email. It's fred.kreger, and unfortunately I have to spell that for you guys, Kreger @AFFloans.com.
Perfect. Thank you very much. So, certainly consult your mortgage professional, give Fred a call, or whoever you do business with. But what a great product to help get out of the rough and into success and be a homeowner soon. We're going to jump to a quick break, but when we come back, I got Melanie Benson-Strick. You're going to want to listen. This lady's an expert when it comes to consulting for entrepreneurs and help get you out of the rough and into success in your business.